It's Monday, that means it's time for Setup Monday. Previously known as New Money Monday, we have a new kind of New Money Monday today with Tesla announcing a $1.5 billion purchase, I believe over the course of January 2021, 7.7% of their treasury into Bitcoin. And maybe even more importantly, they're accepting payments for BTC. That's not any reason for anyone to go out and get excited about spending their BTC. Why would you take an appreciating asset and use it to buy a depreciating asset? The point is general acceptance, and legacy people especially have always pointed to nobody's taking BTC merchant on the merchant side, so why should anybody care? This will definitely start to change the conversation a little bit. Now, I don't expect them to see massive BTC sales from Teslas or anything like that, but the communities overlap big time. Luckily for ETH, on the day of the CME futures launch, we get this big Elon news which overshadows everything, and originally thought to be for me at least how I played it, a risk-off event because of the uncertainty as far as what's going to happen. Regarding the opening of CME, you can compare it to BTC in 2018, but that was definitely a late stage thing. Even at the time, it was pretty obvious. You know, here's the thing: when an exchange goes up several $1,000s per minute, and all the exchanges go down, that's usually a good sign that that's the top. That's what happened originally on places like Coinbase and Kraken in 2017, leading into 2018, and then shortly thereafter that we hit CME. So it was just peak CME futures launched, peak euphoria. In this case for ETH, definitely a different situation. But the thing is, if ETH would have dumped, or it will dump, or does dump, whatever happens here, if it dumps and I look at the chart personally and I say, okay, this is what happened last time, this is what happened this time, I should have been prepared. Even though we can say there's no sample size, it's anecdotal, doesn't matter. It's not about like making money there, it's just the risk of the uncertainty. So as far as the setup for the week, you know, we may see just a rolling announcement of various S&P 500 companies or whoever say, yeah, we're buying BTC now. And that's just going to cause some craziness on the charts. As far as the technicals are concerned, I talk about Claude a lot, but man, if I would have just listened to this second Kijun bounce. So what did I end up doing personally is closing a bunch of ETH stuff, margin stuff, going into Sunday, keeping the BTC stuff open. But what I didn't do a few days ago was relong this Kijun bounce. So how this cloud stuff works is throughout any given trend, you want price above the MAs or the effective MAs, and typically you get bounces, touches of the high capture MA-like line, Kijun. Kind of, you can think of it as like the 60-day moving average. So we tap that frequently throughout any trend. Usually on multiple taps, it's less convincing, but if you just treat the system as absolute every time, you know, you're almost better off. Really better off just listening to the cloud than doing anything else. Not paying attention to any of the news. So I think Tesla is buying in January, which would be, you know, all of this, which may have been why a lot of that miner selling got absorbed on those days. But as far as beyond all-time high, we're looking at 60 something. That's the next pivot. So I like 46K within the week, and I like 63 by the end of the month. If like Apple, for instance, there's rumors that Apple's buying BTC or has bought BTC as well now. So if Tesla and Apple are both in, that's just going to open the floodgates for lots of other companies, large and small, to do the same. So cloud looks great trend-wise. We had a run-up, consolidated, new all-time high, consolidated, new all-time high. We're going to consolidate again, then ideally new all-time high. And this is exactly what you want to see. This is what you hope to see every time you make an all-time high. What you don't want is straight-up parabolic 14-day nonsense, because that inevitably just all dies at the end of it. It just is not sustainable. This gives people time to sell without panic selling. It gives people time to buy without panic buying. It gives people time to think about what they're doing rather than just aping into stuff for BTC specifically. If you look at some other indicators here, this is the alligator fractal. Another similar system, you have your EMAs here, and the fractals tell you entries or exits. And when the MAs are all tangled, that says stop paying attention. When the MAs untangle one way or the other, we're bullish above, bearish below. So we went bullish on these a couple days ago. And if you looked at the 8-hour candles, it was pretty obvious. Somebody was buying pretty much anything at that time. You know, these two candles right here, just solid buys coming in through all of that. So this indicator is telling you yesterday, day before, today, all those are valid long signals because we closed above this wick, which is this fractal here. So more long entry signals there. Here's the cloud, or the pitchfork rather. Pick 3 points, you get a rate of change. Then you get like this gravitational pull towards the middle with extremes on the edges. And the current extreme is basically 6 figures, somewhere near 90 to 100K, which is very doable towards the end of the year or leading into the end of the year. Maybe it's into the next month. Who knows at this point? A litany of announcements here from companies saying they bought BTC, but all this looks bullish. There's plenty of room for upside is what I'm trying to get at here. Here's the 2-year moving average multiplier. So this is the 2-year MA. This is 5 times the green line. And historically, when we get far above the MA multiplier, it's danger zone. So we're not close to danger zone yet. Danger zone is like 56K plus, but you can see, you know, it can bounce around a bunch. It can stay above that multiplier for a couple months before the inevitable gravity sets in. Here's a really interesting one. This is also from lookintobitcoins.com, at least where I first saw that indicator. It's what they call the pi cycle top. So this green line is the 111-day moving average. And now I don't know the rationale exactly for these specific MAs, but whatever it is, it's worked. So we have an N of 3 sample size with 111-day moving average, and then we have 2 times the 350 moving average. So just like the MA multiplier, except it's 350 this time instead of the 2-year. It's basically the 1 year, 2x the 1 year MA. And when that's crossed, it has been a top within 3 days, plus or minus. So something else to watch for, right? If we're getting close and everybody's euphoric, Apple's in, Tesla's in, Warren Buffett changes his mind, you know, all that, just absolute insanity can happen. People get euphoric, but I'll be looking at the numbers, folks. I'll be looking at the MA multiplier. I'll be looking at the pi cycle top. I'll be looking at the pitchfork. You know, if we get above the pitchfork, then we're in interesting territory for sure. Switching gears to ETH, I was watching this consolidate on the USD pair for a month. So just chop around. The chop sort of morphed into an ascending triangle with a bullish bias. ETH loves its ascending triangles. It's had multi-month ascending triangles over the years, but it did end up breaking up on such little volume. That was a really big disappointment. It broke up on next to nothing volume relative to where it was consolidating. What you want to see is kind of what you saw here. You know, this is a couple days worth of consolidation and then explosion of volume, explosion of price. That's what I really wanted to see, what I was really looking for. These are the targets, both the 1618 fib and the measured move. You have your yearly pivot up here. So all in all, I like 2100 leading into the end of this month. Like I already said, I was risk off yesterday because I wasn't sure what was going on with the CME stuff. I just didn't want to take that chance. You know, if you're long from the breakout, you're either re-adding as like a throwback situation, or you're waiting to take profit up here, or if there's some news fundamental event, you know, you're acting accordingly. But I still like this zone. I'm just not currently margin long ETH, and there was massive volume candle when that Tesla news came in. ETH BTC, bit of a sad clown show. It just vacillates all over the place. I don't trade this personally because I don't trust any of the signals I ever get from any of this. Still leans bullish, still leans towards 05, but you know, we're not seeing a lot of corporate treasuries move into ETH just yet. So I don't expect ETH BTC to massively outperform in the near term if you're getting corporations buying BTC. I mean, that's just how the cookie crumbles. You know, we can look at what the price is now, what the price of Bitcoin is, what we expect it to be, what we expect the ratio to be, and then sort of adjust the USD pair from there and say, okay, 2100 might be a little low. We think maybe 2600 if BTC goes up by X amount, whatever you want to think about it as. But I don't think it'll outperform in the near term. I really don't. Looking at a few others on the top of the market cap list, Cardano, just absolute mammoth run over the past few months on the USD pair and on the BTC pair, just straight up. Cardano and a lot of these other ones benefit from the integer bias of new people. They look at BTC, they don't know they can buy a portion of a BTC versus an entire BTC. So they say, I'm not going to bother, that's too much, it's too expensive. But what about some of these other ones like Cardano? And that's where altcoins come in. Cardano's not really listed many places. I don't know if it's on Binance US, but I don't think it's on Coinbase. But that's another factor, how many people can actually access this stuff. Is it on Robinhood? Is it on Coinbase? Is it on Binance US? Does it have a big international exchange presence? Is it something super old like Litecoin? Is it something super new like DOT that has a massive VC bag that's up several hundred multiples at this point? So this is the 4-hour USD pair. It looks great. Looks like a classic long trend. Again, you're getting a move up, consolidate, regroup, move up, consolidate, regroup, and the cloud is just signaling over and over again with these TK recrosses above the cloud to go long. So that's all moving kind of as expected. BTC pair doesn't look as bullish, certainly. Tons of consolidation ranging here. Another reason, just more and more examples why I don't trade BTC pairs directly, because they're just too messy for me. BNB, Binance Coin, just another great example of a bullish trend. TK cross recrosses above the cloud over and over again, all-time high, I believe, at $76. And BTC pair also just having a grand old time, sort of mean reverting back to mid last year prices. So lots of bullish action there. Litecoin, we had the Kijun bounce a few days ago. It had another one in late November. And again, it's just textbook bullish trend. LTC, BTC, textbook bear trend. This chart, I believe this is another all-time low coming in here in LTC, BTC. But this is an example of something that makes me never touch an altcoin when the LTC or when the BTC pair looks like this, right? Like, why would you hold this over BTC if all this has done over the past 3 years is just lose value against BTC, right? So this, as bullish as this looks, it's less bullish than BTC USD. And then Doge, obviously, what do you even say about Doge at this point? It's got all sorts of interesting people talking about it. I'll bookend the video with Elon Musk again, who mentioned it several times on Twitter, and that's played a giant role. I mean, it's never closed a weekly, I guess not never, but not since 2014 has it closed a weekly above 200 sats. So this is the BTC pair. This has a history of retracing 90% of the move over time. So just keep that in mind. Is this time different? Maybe. We'll see. But when I look at this, and when I look at every single pump that's ever happened, it's just been a massive pump and dump. This does not hold, it's not a store of value. It doesn't have a supply cap. None of anything I'm about to say matters because most people are just going to jump into this without even realizing what's going on. It's 7 cents or less than 10 cents. So again, the integer bias kicks in hard because you can buy tens of thousands of this for a couple bucks. And yeah, that'll feel good if it's moving up. But when it's moving down, the panic will set in on these new people, and it'll get ugly very, very quickly if things go south. So let me know what you're watching this week in the comments below, and happy trading.